Welcome. The strategy you will see below is able to give very accurate signals to identify possible trend reversal points in the market. Its accuracy is based on two incredible indicators that I will share with you today for free. So subscribe and stay until the end to learn how to get the most out of these tools. At the end of this video, and you know how to use this strategy, go to our Telegram channel with the link in the description. There you will find both indicators that you can easily install by copying their code one at a time in the TradingView pin editor window. Don't forget to save the indicators. Once installed, we recommend that you disable the price chart in settings, as the indicator draws its own candlestick chart. Let's start. This strategy seeks to take advantage of the impulses in favor of the trend, and for this purpose, the main indicator called trend reversal has been specially designed to identify possible trend reversal points in the market. Its operation is based on a sophisticated and advanced algorithm that analyzes price movements and market structures. It uses a combination of different analysis techniques to detect changes in the trend. When the indicator identifies a possible trend reversal, it generates a signal indicating the direction in which the trend change is expected to occur. This signal gives us the opportunity to enter a trade at the right time. We also have a second indicator called solar winds. It is used to provide additional confirmation of the signals generated by the main indicator. The solar winds indicator uses a totally different configuration and parameters than the main indicator, and its objective is to validate or deny the generated signals, filtering out false entries and reducing failures. This strategy is optimized for low seasonalities of 15 and 30 minutes. It is not recommended to use it in other seasonalities. In this situation, when observing a bearish signal, it is important to take into account the second indicator that confirms the downtrend. This gives us greater confidence in our decision to trade downwards. However, before making the trade, it is advisable to perform a chartist analysis to identify possible support and resistance levels that may be relevant in the current context. Once the important levels have been identified, we proceed to place a sell order, setting a stop loss and a take profit. It is crucial to make sure to place these levels at a strategic point, preferably at a key level that indicates a possible reversal or continuation of the trend. As for the ratio between stop loss and take profit, always use a ratio of at least 2.5 times the size of the stop loss. This helps us to maintain an adequate risk-reward ratio, seeking to obtain potential gains that significantly exceed the possible losses in case the market moves against our position. In this chart, the system gives us a buy signal. The second indicator supports the uptrend, so we proceed to place a buy. We always rely on some trend lines to have a clearer scenario. We place the stop loss at a previous low or support and a take profit at least 2.5 or 3 times the size of the stop loss. Do not forget to monitor all operations to adjust profit levels if necessary. I hope the information provided has been helpful and has given you a better understanding of how this strategy works. Remember that trading involves risks, and it is important to perform a proper analysis before making decisions. If you want to get access to more indicators, I invite you to subscribe to the channel. See you soon.